Good afternoon. This is Ken Long from Tortoise Capital on June 9th, 2014. I want to take a look at this emerging idea of the regression line fractal framework, where we take a look at the relationships between the four regression lines we care about: 10, 30, 90, and 270. And we're looking at the fractal nature of them. So this is a continuation trade opportunity in TNA. That's the triple leveraged Russell Long, and we're looking at daily charts. So this is about a year's worth of data. And so what we had was the market had sold off sharply and now was racing to get back north up to the 270 regression line. And now we wondered how much more was there, and could we set some profit targets. So the first thing to look at, or what we'd think of as the regression line fractal framework opportunities on the long side, or RLFF opportunities. So I've just highlighted some extreme moves to the downside between the 10-period regression line and the 270. That's what that yellow highlight is reflecting, is the distance that the 10 has diverged from this generally upsloping 270. It's diverged twice or three times to the downside, to the extent where this upward trend had now rolled over and was coming flat. So the 270 is that pink, 90 is the green, the 10 and the 30 are the blue and the black respectively. And that's what we use to trigger tactical time trades, is that crossover between 10s and 30s. And so now we've added the 90 and 270. So the opportunities now are these yellow highlighted regions between the 10 and the 270. And after this bottoming action, you can see that price has now moved out to get back to the 270. Is pretty close, within a couple bucks. These green and red lines, if we had drilled down to 3-minute charts here, we could see some trades that we were doing in this blue circle, intraday tactical trades that we actually earned some money on the intraday trades in here, and use that to fund the longer term swing trade. We were hoping to get back to the 270. So this initial intraday trade, swing trading one day at a time, if you will, allowed us to make some money early in this move and then fund the move that eventually takes it back to the 270. So that's what I mean by the tactical trade framing on 3-minute charts during the day. We actually use those same four regression lines, but on a much shorter time frame, and the interpretation is the same. So at the time of the swing trade, what we would say is that the initial 270 regression line target is in this pink circle here, where it's the pink line itself is the target that we use to compute. Now this gray river looking ribbon on here is the actual 30-period Bollinger Band ±1 on these 270 regression lines. So we're treating that as like a noise barrier around the 270. I actually treat that as a Zeno stop area, so that if I were on the downside and moving up, I would be willing to tighten up my stops considerably inside here. You see our lectures on the Zeno stop elsewhere. So the next thing that I'm thinking about now is that with the swing trade now here around 77.16 ish, could it overshoot the 270, and if so, how far? So we can have some kind of reasonable price target on this successful swing trade. The first thing I look at is, really, I've drawn that pink circle or the purple circle around not only the 270 but also this noise region. So really anywhere inside that purple circle, the smaller purple circle, is what I treat as a price target range, because I treat that as like a noise region on the far side of the 270. So then what I'm going to do is I'm going to take a look back and see how far in the past during the uptrend did this overshoot the target. So each of these blue circles shows how TNA had moved from underneath the 270 and how far across that 270 it actually penetrated before it then failed back. I like the fact that it was coming back and forming these lows. But in each case, it was about the size of this blue circle is how far past the 270 it could shoot, including this last one that made the recent swing high at this horizontal purple line. So when I take that size move and bring it over here, it now looks to me like it can get back up and test the previous high. That's not surprising, but that is actually the size of the move that it would make in the past whenever it would shoot past the 270. So now, as price is entering into this local resistance region, I'm thinking, you know, initially the 270, then it has to get through the noise zone, then almost another noise zone to the top of this support level or resistance level, which if it can break out of there would then become support. So that's how we're using the RLFF to give us estimates, quick and dirty estimates of what kind of moves are available inside of these opportunities. So now when we drill down and look at TNA intraday on the 9th, that's today, what we saw was the past 3 days are arrayed here, and after breakouts from SQC moments, that's what I call this one here, it went as high as this green bar. It got up here. That's the last favorable excursion. It got into this sideways chop, and then it formed another SQC moment when it had been choppy, and then it moved and it had an excursion of this far, and then drilled sideways all day on Friday into the close. And then today it popped and went upside again, and then came into what looks like a sideways quiet moment. And you can see that the RL10 has returned to the 270. So here was the RL10 at the start of the day. It moved up to the 270 and held. And in this case, it started with the 270 and went that far, then came back to the 270 and then held. So how far above could this go? I'm thinking 80, because this this SQC moment from the bottom looks an awful lot like this one. That's the nearest neighbor, and when it departed to the upside, it went that far. So if you just cut and paste, you get a target on the upside of about 80 as the potential next excursion to the upside. So you could use that as an opportunity to frame a profit target to the upside. So this was the last favorable excursion to this price level, and then this would be the potential next favorable excursion target based on some kind of symmetry. Now, what I want you to notice now is that after those moves, you have a series now of RLFF retracement opportunities where the 10 has now diverged from the 270, and now you have retracement moves of this magnitude. The fact that it failed to fail is information which made us eager to participate in this early move, which you can see another video on that already on YouTube. And then the last thing I just want to look at is notice the relationship between the RL90 and these nice moves. In this case, it's never easy money, but the early easiest money was here, and now I see the crossing of the 90 as sort of an indication that the run is done, and you have to be protecting your profits from that early run. In the same way, this blue circle shows that same moment. The easy money is done, and now the 90's rolled over. And if you need confirmation, you now have the 90-270 cross. And what's interesting about the fractal nature of these things is that the relationship between the 90 and the 270 is 3-to-1, in the same way that the relationship of the fast pair, the 10 and 30, is also 3-to-1. So this actually gives you an RLCO moment from 2 time frames higher, or 10 periods longer. So you go from 10 to 90 and 30 to 270. That's multiplied by 9. So this move from here, where the 90 departs the 270, it came back maybe for one, it didn't quite cross. This is one move. Or if you said this was close enough to touch, that's a move. This is a move. It gave one move back, and now we're looking to see the next move. So there's a certain symmetry to this. This was a continuation pattern on the XIV Turbo, which we have been playing since 36 to the upside. It's the gift that keeps on giving. So this is today. And now we've zoomed in. You can see the 270. Here's the Bollinger Band noise region, the Bollinger Band on the 270. And this was the end of Friday, and then this is the open. So we had a gap up opening, went up this far, pulled back, found support here, and then on the resumption of this, I take a look at this and say the distance from the 10 to the 270 is the opportunity. So I buy it on the basis of previous strength just to see. I have my 20-cent stop in here, typically 20 cents in XIV for me. Just letting it go. The 90 is joining the play. The 270 is still up. At this moment, after it fails to fail here the second time and has a higher low, which I'd like, it's now starting to move. And now it's either going to take out this target or it's going to fail. So at this moment, I elect to go ahead and lock in my move, and I move my stop to 43.35. That's about a half an hour gains. I think it's about 0.4 after you count slippage. And then if it were to get through here and break out to a new high, I would expect to see it get to the Zeno stop area or the gray shaded area, and then back to the 270. But no matter what, I'm going to make at least a half an hour on this one, and I would like to see it do some moves like this. In fact, what we got was the opposite of that. Oh, why isn't this showing? Here, okay, here we go. So this was the trade. Now on a longer time frame, this is where we made the stop up to 435. It gets up here and tests that, but then just rolls over and takes our stop out. I'm looking for a break below the original stop to really declare this thing dead. I really am hoping that it will find support, because I really want to get back, and I like this distance to the 270. But when it fails to do that, you can see how the 270 is rolled over. The noise channel diminishes. Now the signal is to the south. The 90 is rolled over. We call that the 12 o'clock position when it hits the apex and then rolls over. And now we can execute this as a short. We actually executed this failure in VXX, but it's the same move. It's symmetrical. And so you get this nice move on the initial breakdown from the low of the day. And it collapses down here. We get an RLCO signal on the 1030 crossover, so I get out in this hump. And now I'm looking at this last little bit from 42.40 to 43.50. That's $1.10. That's a 5R potential move on a 20-cent initial manageable risk. So there's opportunity, but we're already in the last hour of the trading day, so I've really only got about 20 or 30 minutes for it to make that move. The initial move would be to the 90 where it crosses, and then back to the low of the day where it collapsed, and then the far side. I elected not to trade this one at all because I just didn't have all four conditions in hand: time, will, pattern, and money. I just didn't have the time left in the day to make that trade. The next one, let's see, is this one? Okay, so this is the TNA trade today, and so it opens low, and we see this as the opportunity from the 10 to the 270. I think of that as an SQC moment, the train leaving the station, and then the destination being the return to the 270. This one actually moved out nicely and was very efficient, and it arrived at the station here at the 270, and the impetus is gone. And now you have this ascending triangle kind of drawn by the 90, which is very helpful. And so in this period here where it fails to fail below the 90, I think of it as thinking about the next trip. And now here's the next moment of the SQC train leaving the station. And then I take the size of this move, clone it, and now here's the size of the next potential move, potential length of the next excursion to the upside. It gets about 80% of that. It rolls into an RLCO, so you have to think about getting out here. And now the distance on the retracement is from here back to the 270. Here's the price crossing the 90, so if you were holding out and wanted to hold on to this thing, that would sort of tell you you're closer to the end than the beginning of that easier move. And now here is the return to the station. It actually fails through there and gets back to the rising 270. And by this time, you know, the 90 has gotten to the 12 o'clock position. The 30 has rolled over and is now approaching the 3 o'clock position on the clock face. And so you can treat this as final confirmation that the run is fading. Now, meanwhile, Brazil moved out smartly for us. This is a turbo continuation of something we were day trading and swing trading last week. It's in the blended monthly rebalancing holding, so this thing has a ton of relative strength compared to other large global indexes. We framed this as a critical state trade last week when it had favorable reward to risk ratios in both directions on the swing trade one day at a time technique. And so this one moves out quickly from the 10. The 10 now closes the gap to the 270, which just continues right on. By the second hump here with at 48.35 with my typical 30-cent stop. This case is on the far side of the noise river here, this gray ribbon around the 270 or of the 270. And so we buy this one here at 40.35. I stop 30. It's very efficient all the way. This was a moment to consider. Maybe that's worth the halfway point. The 30 has crossed the 90. If you want to look at price crossing the 90, here you go. But in this region, you now say ensure that you are preserving this move. By that time, my stop is, which I'm using the midpoint of the noise channel just to have something to practice. I'm already into the money. I'm going to make money on this one. I just decided to let it go. Comes back to the 270, finds support, zooms, makes another leg up, and now we get a sharper retracement. Comes down, hits my noise stop inside the that 270 regression lines, the midpoint of its Bollinger Band. So we get out at 49.20. That's an orderly trade from 48.35 to 49.20 and a 30-cent stop intraday, 2.8R. Pretty easy to manage, just following the lines. Finally, Yehuda in the chat room was talking about an opportunity he saw to speculate on cocoa, which I've never heard of before, Corinthian Colleges Inc. He liked this low down here at 78 cents. The last time it hit a local low and we got this measurable opportunity from the 10 back to the 270, it actually moved this far. So we're thinking, if we were into this trade, how far could it go? So we just wanted to apply the methodology to it. Clone, cut, paste off this low, off the 10. That would, a parallel or symmetrical move would be back to almost a buck. That's not far off from the first RLFF target, which would be from the 10 back to the 270. Then as for continuation plays, if it got through there, I would say the start of the noise, the middle of the noise, the far side of the noise, and that would be a 100% move if it just got to there off the low. So on the first stage of that move, that's how we might judge or interpret how well that trade is working, sort of an initial justification, confirmation by the regression line, and some noise channel targets. And then if it gets through there, then you're off and running and you're having fun. So this is Ken Law from Tortoise Capital with some practical updates on this emerging technique of the regression line fractal framework, RLFF. Keep your risk measured and your powder dry.